The whole world has started thinking about whether it is worth using the dollar if the US, for political reasons, limits the use of the dollar as a universal international payment unit. Everyone has started thinking about this, and the volume of dollar use is slowly but slightly decreasing, both in settlements and in reserves. Even traditional US allies are reducing their dollar reserves.
Hello everyone, let's start with the latest news. In October 2024, at the BRICS Business Forum, Russia made a bold proposal that's been turning heads in the world of international finance. They introduced something called the BRICS Pay Card and even gave a live demonstration of how it works. Subscribe to GeoFlux to find the latest updates about global economy and finances. Now, you might be wondering, what exactly is this BRICS Pay Card? Well, it's essentially a new payment system that aims to reduce the world's dependence on the US dollar. It's a big deal because, as of now, the dollar is the dominant currency in global trade and finance. But with this new system, BRICS countries, that's Brazil, Russia, India, China, and South Africa, are looking to change that. The BRICS Pay Card was showcased on October 17th and 18th, and attendees at the forum got to see firsthand how it functions. It's not just a concept or a theory. It's a real, working payment system that could potentially rival the likes of Visa and MasterCard. But the BRICS Pay Card is just the beginning. There's a lot of anticipation around the upcoming BRICS Summit, which is set to take place in Kazan from October 22nd to 24th. Many experts are speculating that we could see some major announcements regarding this multi-currency system that BRICS is pushing for. There's talk of further details being unveiled on how BRICS Pay will be implemented, and what it could mean for the future of international transactions. Will it truly challenge the dominance of the US dollar? Will it level the playing field for developing countries? These are the kinds of questions that are on everyone's minds as we approach this pivotal summit. So, as you can see, there's a lot happening in the world of global finance right now.
According to data from the IMF, the dollar's dominance as the world's reserve currency has been eroding since about the year 2000. At the beginning of the century, it was estimated that almost 75% of global central bank FX reserves were held in dollars. That number has decreased to around 60%. At the same time, global central banks have shifted a significant amount of reserves into gold, where they now hold in storage more than they have since the 1990s.
The introduction of the BRICS Pay Card and the upcoming summit are just the latest developments in what could be a major shift in how money moves around the world. Now that we've covered the latest developments, let's take a closer look at why it's been a point of contention for so many countries. To really understand this, we need to go back to the end of World War II, to a place called Bretton Woods. This is where the current system was born, with the US dollar at its heart. The idea was that the dollar would be the world's reserve currency, and all other currencies would be pegged to it. At the time, this made sense. The US was the world's leading economy, and the dollar was seen as a stable, reliable currency. But fast forward to today, and many argue that this system is outdated and unfair, especially to developing countries. Think about it. The US can essentially print money and run up huge deficits, knowing that there will always be demand for dollars. Meanwhile, developing countries have to either borrow in dollars or attract dollar investments, which can leave them vulnerable to currency fluctuations and other external risks. There's also the issue of sanctions. Because the dollar is so dominant, the US can effectively cut countries off from the global financial system if it doesn't like what they're doing. We've seen this happen with countries like Iran and Venezuela. Even the threat of sanctions can be enough to make countries toe the line. Critics argue that this system disproportionately benefits the US and Wall Street, while leaving the global south, that's essentially the developing world, at a disadvantage. Countries in the global south often have to pay higher interest rates, face currency risks, and have less control over their own economic destinies. We've seen some stark examples of this recently. When the US imposed sanctions on Russia, it sent shockwaves through the global economy. Suddenly, countries and companies that did business with Russia were at risk of being cut off from the dollar-based financial system. It was a wake-up call for many about the risks of relying so heavily on one currency. So that's the backdrop against which BRICS is pushing for an alternative system. They argue that the world needs a more balanced, more diversified financial order, one that isn't so heavily dependent on the US and the dollar. And that's where their recent proposals come in.
Now, as global tensions have risen, so has the effort by some central banks to move further away from the dollar. Many analysts will point to the sanctions on dollar holdings of Russia in the wake of the invasion of Ukraine as a significant moment in the dollar's reserve status. They argue that a responsibility of the reserve currency nation is that they must be an impartial arbiter of global disputes.
In 2024, under Russia's chairmanship, BRICS has put forward a vision for a new financial architecture. The BRICS pay system that we talked about earlier is just one part of this. The broader idea is to create a multi-currency system where countries can trade and invest in their own currencies, rather than having to rely on the dollar. This, they argue, would make the global economy more stable and more equitable. Russia's finance ministry has put forward some specific plans for how this could work. They're talking about creating a network of banks that can facilitate trade in local currencies, establishing direct links between central banks, and using new technologies like blockchain. They're also looking at ways to use commodities, things like oil, gold, and other raw materials, to balance out trade between countries. The idea is that if a country has a trade deficit, it could pay with commodities instead of dollars. Another key proposal is to strengthen the BRICS Contingent Reserve Arrangement. This is basically an alternative to the International Monetary Fund, IMF, which has traditionally been dominated by Western countries. The idea is that BRICS countries could pool their resources to create a safety net for times of economic crisis. We don't want to be at the mercy of the dollar anymore. We want a system that works for us, too. But of course, this is easier said than done. Creating a new global financial system is a massive undertaking, and there are a lot of challenges and potential roadblocks ahead. That's what we'll be exploring in the next section. Now let's take a closer look at BRICS Pay, the system that's been making headlines recently. This isn't just another payment app, it's a potential game changer in the world of international finance. At its core, BRICS Pay is designed to be decentralized. This is a big deal because it means no single country or institution has control over the system. Instead, it's a collaborative effort among the BRICS nations. The idea is to create a network that's resilient to external pressures, like sanctions. One of the key features of BRICS Pay is its use of national currencies. Instead of converting everything to dollars, the system allows for direct exchanges between, say, Russian rubles and Chinese yuan, or Indian rupees and Brazilian reals. This could potentially save billions in conversion fees and reduce the risks associated with exchange rate fluctuations. There's also talk of integrating central bank digital currencies, or CBDCs, into the system. Several BRICS countries are already working on their own digital currencies, and BRICS Pay could provide a platform for these to interact on an international level. But what does this mean for the average person or business? Well, imagine you're a small business owner in Brazil, wanting to import goods from China. With BRICS Pay, you could potentially make that transaction directly in reals and yuan, without having to go through the dollar. It's faster, potentially cheaper, and less vulnerable to US monetary policy or sanctions. The user experience is designed to be straightforward. At the recent demonstration, attendees were able to make purchases using QR codes, similar to how many mobile payment systems work today. But behind that simple interface is a complex system designed to handle cross-border transactions seamlessly. Of course, with any financial system, security is paramount. BRICS Pay is being developed with robust fraud prevention measures and encryption protocols. The goal is to create a system that's not only convenient, but also trustworthy and secure. When we compare BRICS Pay to existing systems like SWIFT, which has been the backbone of international banking for decades, we can see some key differences. SWIFT is centralized and heavily influenced by Western countries, particularly the US. BRICS Pay, on the other hand, is designed to be decentralized and controlled equally by its member states. Now, let's talk about the goals and potential benefits of these BRICS proposals. The overarching aim here is to create a more equitable and efficient global financial system. But what does that really mean? First and foremost, it's about reducing the dominance of the US dollar. By enabling more trade in local currencies, BRICS countries hope to reduce their vulnerability to dollar fluctuations and US monetary policy. This could provide more economic stability for developing countries and potentially lead to more balanced global trade. There's also the issue of sanctions. As we've seen in recent years, the US has used its financial dominance to impose sanctions on countries it disagrees with. By creating alternative payment channels, BRICS aims to reduce the effectiveness of these sanctions and give countries more economic sovereignty. Another potential benefit is cost reduction. By cutting out intermediaries and using new technologies like blockchain, BRICS Pay could potentially make international transactions faster and cheaper. This could be a huge boost for businesses, especially small and medium-sized enterprises that often struggle with the costs and complexities of international trade. For developing countries, there's the potential to borrow and invest in their own currencies. This could reduce the risks associated with dollar-denominated debt, which has been a major issue for many emerging economies. When a country borrows in dollars, any depreciation in their local currency makes that debt more expensive to repay. By borrowing in local currencies, this risk could be mitigated. In the medium term, one of the key goals is to diversify reserves away from US dollar assets. Many countries hold large reserves of US Treasury bonds as a safe haven asset, but this also makes them vulnerable to US economic policies. By creating alternative reserve assets, BRICS hopes to provide more options for central banks around the world. But it's important to note that this isn't just about BRICS countries. The hope is that this new system could benefit developing countries around the world, providing them with more options and more control over their economic destinies. Of course, these are ambitious goals, and achieving them won't be easy. There are significant challenges and skepticism to overcome, which is what we'll be discussing next. While the BRICS proposals sound promising, they're not without their challenges and skeptics. Let's take a look at some of the hurdles these plans face. First off, there's the technical challenge of implementing a multi-country system. We're talking about integrating 5 and potentially more different financial systems, each with its own regulations, technologies, and quirks. It's a bit like trying to get 5 different computer operating systems to work seamlessly together. It's possible, but it's not easy. Then there's the regulatory minefield. Each BRICS country has its own financial regulations, and creating a system that complies with all of them is a complex task. Not to mention, they'll need to ensure that the system meets international standards for things like anti-money laundering and counterterrorism financing. There's also the question of trust. The US dollar has been the world's reserve currency for decades, and there's a lot of trust built into that system. A new BRICS currency or payment system would need to prove its stability and reliability over time. Will countries and businesses be willing to take a chance on a new, untested system? We can't ignore the geopolitical tensions either. Relations between BRICS countries aren't always smooth, and conflicts between members could potentially derail the whole project. Just look at the recent tensions between India and China. How might that affect their cooperation on a shared financial system? And let's not forget about resistance from established financial institutions. Banks and other financial companies that benefit from the current dollar-dominated system aren't likely to welcome this change with open arms. They might lobby against it or create obstacles to its implementation. There's also skepticism about whether BRICS countries can truly create an alternative to the dollar. Critics point out that China's currency, the renminbi, still isn't fully convertible, which could limit its use in international trade. And some argue that the economies of BRICS countries aren't stable or large enough to support a global reserve currency. So, while the BRICS proposals are ambitious and potentially transformative, they face significant hurdles. It's going to take a lot of cooperation, technical innovation, and political will to overcome these challenges. Now, let's shift gears and talk about the role of digital currencies in the BRICS strategy. This is where things get really interesting. Central bank digital currencies, or CBDCs, are a hot topic in the world of finance right now, and BRICS countries are at the forefront of this trend. China, in particular, has made significant progress with its digital yuan. They've already conducted large-scale trials, with millions of people using the digital currency for everyday transactions. Other BRICS members are also exploring CBDCs. India has announced plans for a digital rupee, Brazil is working on a digital rial, and Russia has been discussing a digital ruble. These aren't just academic exercises. These countries see CBDCs as a key part of their financial future. So how do CBDCs fit into the BRICS strategy? Well, they could play a crucial role in creating a more integrated BRICS financial system. Imagine a world where digital yuan, digital rubles, and digital reals could be exchanged instantly without the need for intermediary currencies or banks. This could make cross-border transactions faster, cheaper, and more transparent. There's even talk of a BRICS-wide digital currency. This would be a massive undertaking, but it could potentially create a true alternative to the US dollar in international trade. A BRICS digital currency could be used for everything from trade settlements to foreign exchange reserves. The integration of CBDCs with systems like BRICS Pay could be a game changer. It could allow for real-time, low-cost transactions between BRICS countries. and, potentially, with other nations that choose to participate in the system. But it's not just about government-backed digital currencies. The rise of cryptocurrencies and decentralized finance, DeFi, is also influencing BRICS thinking. While they're not likely to embrace fully decentralized cryptocurrencies like Bitcoin, they are looking at how blockchain and other crypto technologies could be used to create more efficient financial systems. The implications of these BRICS financial initiatives could be far-reaching, extending well beyond the member countries themselves. Let's consider some of the potential global impacts. First and foremost, we could see a significant shift in global economic power dynamics. If BRICS succeeds in creating a viable alternative to the dollar-dominated system, it could reduce the United States' ability to project economic power globally. This doesn't mean the US would no longer be an economic superpower, but it might have to share that status more equally with others. We might also see changes in international trade patterns. If businesses can trade directly in their local currencies without going through the dollar, it could lead to more trade between developing countries. This could potentially reshape global supply chains and trade relationships. For non-BRICS developing countries, these initiatives could present new opportunities. They might be able to reduce their dependence on the dollar, potentially giving them more economic stability and policy flexibility. However, they'd also need to carefully consider the risks and benefits of aligning more closely with BRICS financial systems. Western economies and financial institutions are watching these developments closely. Some see it as a threat to their dominance, while others view it as an inevitable evolution of the global financial system. Either way, they'll need to adapt to a world where they may no longer hold all the cards. As we look to the future of international finance, it's clear that we're heading towards a more multipolar world. The days of a single dominant currency may be coming to an end, replaced by a system where multiple currencies play important roles in global trade and finance. This doesn't mean the dollar will disappear overnight. Far from it. The US dollar is deeply entrenched in the global financial system, and it will likely remain a major player for years to come. But we might see a gradual shift towards a world where the dollar shares the stage with other currencies, including those from BRICS countries. One possible scenario is the coexistence of multiple reserve currencies. We might see central banks around the world holding a mix of dollars, euros, yuan, and perhaps a BRICS currency. This could lead to a more stable global financial system, as it would reduce the risk of a crisis in one currency destabilizing the entire global economy. The role of cryptocurrencies and decentralized finance, DeFi, in this future landscape is another fascinating aspect to consider. While government-backed currencies will likely remain dominant, we might see increased integration of blockchain technologies and even some use of decentralized cryptocurrencies in international finance. Long-term, the prospects for de-dollarization are intriguing. It's a gradual process, but we're already seeing signs of it. Countries are increasingly making trade deals in their own currencies, and there's growing interest in alternatives to dollar-based systems like SWIFT. The BRICS initiatives we've discussed could accelerate this trend, but it's important to remember that this isn't a zero-sum game. A more diverse global financial system doesn't necessarily mean the US loses and others win. Instead, it could lead to a more resilient global economy that's better able to weather crises and serve the needs of all countries, not just the most powerful ones. The role of digital currencies, particularly central bank digital currencies, emerged as a key theme. We saw how CBDCs could play a crucial role in creating a more integrated BRICS financial system and, potentially, even lead to a BRICS-wide digital currency. Looking at the global implications, we considered how these initiatives could shift economic power dynamics, reshape international trade patterns, and present new opportunities for developing countries. Thanks for watching GeoFlux, and see you in the next video.